What's up guys, my name is Derek Jackson. Welcome back to yet another video. And a while back, almost 2 weeks ago, I made a video called Having Trouble Reading Balance Sheets? Watch this. Now, reading a balance sheet at this point is still something that I'm working on. I'm definitely in a better position, but I completely understand how important it is to analyze a company's balance sheet, especially when you're considering investing into them for the long term. However, like I said in that video, a balance sheet's only going to give you a snapshot of a company's financial history. It's going to give you their financial stats at a particular moment in time. But there was a journey with a beginning that took them to that point. And that journey is going to be the next section of their financial information, which is going to be the income statement. So first off, what is an income statement? So an income statement is defined as a summary of the company's revenue and expenses. It's always beneficial to compare it to a balance sheet when helping understand what it is. So the best way to explain it, aside from that definition, is that a balance sheet tells you where you are, and an income statement tells you how you got there. And to get through that journey, there are important statistics that we all have to understand, especially when you're reading the income statement, and that's gonna start with the revenue. So revenue, you know how when you get your paycheck and you see the number that you made based off the hours of the salary that you worked, and then you see the taxes, and you see the 401k, and maybe some other contribution that you make. So imagine if you took those other contributions and taxes away and you're just left with that first number. That is basically your revenue. A company's revenue is the amount of money they made before any expenses at all. So I wish it was really like that in real life, but we gotta be grown-ups and pay taxes, so kind of is what it is. And also we have to spend money to be able to make that money. It's kind of the theme of the overall income statement, but that takes us to the cost of sales. The cost of sales is how much money you have to spend to provide a good or service. And that is based upon the type of company that you have. So it can be raw materials as your goods or services, the price of a wholesale item can be your goods or service, or just providing needed supplies for that particular service. Any of those definitions support what a cost of sales is. But when you deduct the amount that you spent on cost of sales from the revenue that you made in that period of time, you're left with your gross profit. Your gross profit is a really important number. That's a number that personally, if you wanted to apply for a credit card or apply for a mortgage, that's a number you're actually going to put in as what you make per week, per month, or per year. But unfortunately, that is not the stop. That is not the end of the journey for a particular company and how much they're valued at. There's a bit more operating expenses that we got to talk about. Speaking of operating expenses, from my experience, it seems like what can be categorized is a bit different per company, but the overall common denominator is going to be your SG&A, which stands for your selling, your general, and administration. So under the SG&A umbrella, there are going to be two different types of fees that a company's paying. A variable fee, which is something they're going to pay every now and then just based off where they're at in the world, and a fixed fee, something they're paying regardless. So that's gonna range from things such as leases or rents if they have a property, payroll, which is probably gonna be more on the fixed because you're always gonna wanna have employees, and other things that come with that, like office supplies and other stuff in regards to that. Those are typically things that a company is going to consistently pay for. The rent, the leases, that may vary because you're gonna upgrade, you may downgrade, you may move somewhere else. And then when you take that amount and you subtract it from everything else, you had your gross profit and you subtract it from your operating expenses and any other taxes or fees that that company might have, you're left with something that a lot of people may call, and something that you may heard of a lot, as the bottom line. I don't know if you've worked for a company where your boss has said, hey, look, as long as this supports our bottom line, or hey, you know, as long as our bottom line is good, bottom line this, bottom line that. The bottom line literally originates from an income statement. And the bottom line is actually what is the final value of a company's income statement. And that is the net income, or the net loss. So the net income of a company is how much money they have left within that given period of time after all expenses have been paid. So going back to that paycheck that you get, you have that revenue amount, but then you gotta subtract the taxes, the 401k, and any other contributions. That leftover amount, that's your net income, and hopefully it's never a net loss. A net loss essentially means a company has lost money over that given period of time. And negative numbers and small numbers don't look that great, but you really have to understand what the company is all about. So we need to look at a company's income statement to kind of get more of an idea. So just like we did in the last video, we're gonna look at Metamaterial's quarterly income statement, But this time we're gonna look at their quarter 3 from 2021, which was just revealed pretty recently. And on top of that, it's really important that we look at a company's income statement in this video, because I came up with 3 different things that you really need to keep in mind of when reading an income statement and keeping in mind of what the company is behind that income statement. So let's take a look at that. So first thing that I'm going to personally try to keep in mind of when I look at an income statement is what stage is this company at? How old is this company? So for example, with Metamaterials, they are a 10-year-old company. So in general, they're a fairly new company. Now, when it comes to the stock market and raising money, they've been on the stock market for about 6 months or so, ever since they merged with Torchlight and ended up on the NASDAQ. So because of that, there's certain values for Metamaterial on their income statement that I don't expect to be ridiculously high in comparison to other companies like Apple and Microsoft with more experience. That's why when you look at Metamaterial's revenue and their gross income, they're gonna be in the hundreds of thousands, numbers that are fairly low, but still positive and something I can see rising as they gain more experience and age over time. The second thing, which I probably actually think is the most important, at least in my personal opinion, is keeping in mind where a company is spending their money. And that's especially important when you see that their net income is negative. Metamaterials for their quarter 3 2021 net income was actually negative $11 million. So they had a net loss. And on the surface, that looks really bad. But on top of the fact that they're young, you also have to keep in mind where they're spending their money at. So you remember how we talked about selling, general, and administration, and how companies have to spend money on payroll and expenses and rent and stuff like that? Well, with Metamaterials, that is where they're spending the most of their money this quarter. They've spent about $9 million within that period of time. And if you know about the company and how they've been progressing, that actually makes a lot of sense, because Metamaterials has been in a position where they've been trying to grow. They've been hiring new people, they've been in parts of acquisitions, they've been expanding facilities, and because of that expansion, they're having to buy new manufacturing equipment, and with that equipment, they need specialists and employees to hire to actually use that equipment. And all those employees under this umbrella we know as Metamaterial is going to require payroll. They're also going to need desks, which is going to require office supplies. All this is telling me for this particular company is that yes, they are spending a lot of money on the SG&A. This is a growth aspect. We're hiring more people. We're trying to get started with the whole growing aspect of it. So I see this number in the long term for a lot of companies being very high. I think the more successful you are, depending on your field, the more you're spending on your employees and on your business. But I don't see that being a long-term impact in making their net loss negative over a given period of time as we get into the future. The last thing I'm gonna make sure I keep in mind when checking out a company's income statement is keeping in mind of where they're at in comparison to last year on their income statement. So with a company like Metamaterials, their net income or their net loss is actually worse than what it was on that previous period of time last year, but their revenue and their gross profit is higher. So what that tells me is that they're spending more money, but they're also making more money. And we've all heard that motto that to make money, you gotta spend it. And that's kind of something that they're doing right now. Plus again, Metamaterials is in a development stage. They're a young company. They're spending a lot of money on acquisitions and expanding facilities and new employees and new scientists, and to be able to make it in a quicker manner and use it in an effective manner to attract more companies. Again, overall, this company is in a development stage, and knowing what I know about this company, they're going in the right track. So seeing this information in comparison to, at this point in time last year, does give me a little hope that the next time it's gonna be better and eventually they'll be profitable. But that just goes to show that you need to understand what the company is all about that you're analyzing. Don't just look at the numbers. The numbers are gonna give you a lot of the story, but you need to understand the background of the company, what they do, how old they are, what position they are within their field or within just their history overall. If you are interested in Metamaterial, because I've been talking about it a lot, make sure you check out this video where we actually dive deeper into their quarter 3 statement. I get more opinions on where I think about this company. Make sure you guys watch that. And I appreciate you guys watching this video. And until next time, take care.